Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Okay, for today classes for financial management, we learn for these topics for this week, management of current liabilities. Okay, what we will cover for this topic. Okay, what we will cover for this topic. Okay, this is the learning outcome. Okay, or learning objectives. The first one uh, the first one is explain the working capital financing policy. Okay, before this, when we learn about managing current asset, we also have a management current asset policy. Now, when we move to the next topic, managing current liability, which is same goes to working capital financing policy. Okay, we also have that policy that we need to understand, and we need to know what is that policy to apply in managing our current liabilities. Okay, the second one, we describe the pro and cons of short-term financing or current liabilities. Actually, short-term financing, what is short-term financing is actually come from current liabilities. Okay, there are example of current liabilities. Okay, accounts payable, we have accruals. Okay, we already know in financial accounting about current liability. We have short-term loan. Okay, we have accounts payable. Okay, so that's the example of current liabilities. In management, in financial management, okay, our discussion further in terms of we also have inventory loan, we also have commercial paper, we also have account receivable loan. Okay, okay. The last one, briefly explain the sources of short-term financing and current liabilities. Okay, let's look the first part. Okay, what is actually sources of financing? Okay, we have three sources of financing. Okay, spontaneous sources, temporary sources, and permanent sources. Okay, what is actually spontaneous sources? Okay, spontaneous sources is readily or easily available to business in the normal courses of business affair. These sources include trade credit. Okay, so spontaneous means that spontaneous happen in daily business operation. For example, trade credit. Okay, allowed by the sundry creditors, by the creditors or accounts payable, credit from employees, and other related trade credits. Okay, other related trade credits. The biggest benefit of spontaneous sources as working capital, it is effortless raising and insignificant cost compared to traditional way of financing. Okay, what means by effortless raising? Okay, the spontaneous, for example, is accrual. Okay, accrual and trade credit. The spontaneous increase according to the increase of the purchases or increase of the credit purchases. So when you increase of the purchases, also increase the credit purchases, our accounts payable also increase. That's means of the spontaneous. Dia meningkat secara spontan dengan peningkatan nilai belian. Bila belian meningkat, belian secara kredit pun akan meningkat. Automatically nilai accounts payable pun akan meningkat. Okay, so spontaneous source of financing example is accounts payable. Okay, the next one, temporary capital, temporary working capital. Okay, differs from permanent. It differs from permanent working capital because it is cyclicity. Okay, that's only temporary. As a result, temporary working capital usually require a different sources of financing than permanent working capital. While permanent working capital is usually financed through a permanent long-term financing. Sources of equity such as capital, debt, and working capital often financed by temporary or short-term sources. Okay, for example, okay, now we have to, what I have explained to you, okay, just now is actually what is temporary sources and permanent sources. Temporary sources is just for temporary. Normally, we will finance the temporary sources using the temporary of sources. For example, we have temporary working capital. Okay, normally we usually require different sources of financing. Okay, compared to permanent sources, we will use permanent financing also, long-term financing for cover our permanent sources. Okay, that's the difference between spontaneous will be increased by spontaneous in daily operation, temporary, based on the cycling, based on the seasonal. Okay, only temporary, but permanent is for permanent sources for long term. Okay, long term period. All right. So this is the pro and cons of short-term financing. What is the pros? Okay, quick funding. Okay, very quick when you want to obtain the short-term loan compared to the long-term loan. So short-term loan is more quick to process, more quick to obtain, but and easy to qualify. Okay, accounts payable easy to qualify. How to make a trade purchases in trade credit. Okay, credit purchases. Yeah, that's transaction. That's trade credit is easy to qualify. Handle seasonally uncertainties. Okay, that is pros for short-term financing. How about the cons? Okay, high interest rate. High interest rate. Okay, for short-term financing compared to long-term financing, require frequent payments. Okay, require frequent payments. Um, for example, for short-term financing, we have accounts payable. So we need to pay back within maybe 1 month. The trade credit given, credit term given 1 month or 2 month. Okay, short-term loan also maybe monthly. Okay, with a higher interest rate compared to long-term and potential to debt. Okay, next. That's another part is working capital policy. We have three working capital policy. The first one is maturity matching approach. The second one is conservative approach. The third one is aggressive approach. Okay, so aggressive is more aggressive. Okay, still remember the management asset currency managing asset currency policy. Okay, asset current policy. Okay, so we have aggressive also. Okay, we have moderate and we have conservative. Same goes to working capital policy or managing current liability policy. We also have conservative. We also have aggressive and maturity matching. Matching means that the in between conservative and aggressive. Okay, let's look what is the. Let's move to uh, to look at what is actually maturity matching approach. Okay, I think I will explain. It's not maturity first, conservative first. Okay, conservative approach. What is conservative approach? Uh, Conservative approach is to finance working capital use. Okay, to financing working capital use more long term and less short term. Okay, the keyword is more long term and less short term financing. Okay, more long term and less short term financing. Okay, look at the diagram here. Okay, where is the more long term and less short term? When you look at the long term financing here, okay, where is my okay? When you look at the long term financing here, okay, the long term financing is more. Okay, long-term financing is more to cover permanent working capital and also fixed asset. Okay. How about the short-term financing? Okay, short-term financing only small amount here. Okay, this is for short-term financing. Only small amount here. Okay, that's conservative approach. Why conservative approach? They use less short-term financing because they want to uh, okay, they want to face with the high interest rate. Okay, compared to long-term financing, they have low interest rate. Okay, so that's why conservative. Conservative means that uh, they are not in aggressive one. They are worry about risk. Okay, it's not the risk taker. Okay, dia bukanlah risk taker, dia bukanlah apa ni yang terlalu agresif, dia just konservatif. Sangat berhati-hati. The word is sangat berhati-hati lah. Okay, sangat berhati-hati in choose their financing approach. Either they want to use short-term financing approach or long-term financing approach. The temporary current asset. Sum of temporary. Okay, sum of temporary ni like this. That is sum of. Sebahagian daripada temporary. So semua ni. Okay, ni adalah long-term financing. Banyak part dia cover. Okay, at other times when asset needs are low, the firm has more long-term financing and its asset need to operate the firm. At this time, the firm used the excess fund to invest in marketable securities. Okay, so that by financing a portion of its seasonal needs for fund on a long-term basis, the firm built in margin of safety. What means by margin of safety? Margin keselamatan. You already learn in costing or management accounting, if I'm not mistaken. This is margin of safety. Dia ada satu tahap keselamatan dia untuk maksudnya dia ada reserve profit ataupun dia ada reserve fund. Okay, untuk apa ni achieve that, ataupun dia ada reserve fund for that, for acquire, untuk sampai satu tahap yang kita panggil tahap yang selamat lah. That's margin of safety. Okay, now what is the aggressive? Okay, how about the long-term financing for aggressive? When you look here, okay, the aggressive part, they use not so big amount for long-term financing. Okay, but when you look at the short-term financing, okay, they cover all the temporary working capital and also half of a part of permanent working capital. Okay, for short-term financing, use less long-term and more short-term. Okay, okay, use what happened? Set. Okay, because of draw item is active. Home. Alright. Okay. Yeah. Dia active lagi. Never mind. That one we use madam use the pen. Okay. Use I want to use the highlighter. Okay. Let me use the highlighter. Okay, now. Okay, use less long-term and more short-term financing. Okay, the keyword is use less long-term. The keyword for conservative is use more long-term, less short-term. But now, use more short-term financing, use less long-term. See the differences between conservative and aggressive? Aggressive use more short-term financing. Why? Because they are not afraid about risk. What types of risk in short-term financing? The high interest rate. Okay, so the high interest rate. What another cons? Okay, require frequent payment. So for the aggressive approach, they're not afraid about the high interest rate. Okay, dia tak kisah pun about the require frequent payment, and then that's why they prefer to use a more short-term financing compared to long-term financing. That's we call aggressive approach. Dia nak cepat kan? Dia nak cepat, so dia gunakan short-term financing sebab lebih mudah untuk approve. Sebab dia nak cepat, nak buat keputusan, nak dapatkan banyak fund untuk apa ni, untuk run the business, so they use more short-term financing. This is aggressive. Alright. So this is the explanation of aggressive. Okay, aggressive approach use less long-term and more short-term financing. The goal is to raise profitability in quick or in dalam keadaan yang lebih cepat, more faster. Okay. Based on the risk return trade-off rule, higher expected return and profitability comes at the expenses of the firm's willingness to take on greater risk. Okay, so dia punya based on risk and return. Risk and return we will cover next week. Okay, topic risk and return. The higher risk, aggressive approach may lead the higher return. Maksudnya the higher risk that we are facing, maybe we will get the higher profitability, the higher return. That's the conclusion. Okay, so how about the maturity approach? So maturity approach, okay, firm hedge against working capital risk by matching the maturity and asset and liabilities. Okay, so they only cover for short-term financing for this part. Okay, not too big and not too small amount for short-term financing. They cover all the temporary working capital for short-term financing. But for long-term financing, they cover all the permanent working capital and fixed asset or non-current asset. Okay, so the maturity matching approach is fall below under the aggressive and conservative. Dia duduk di tengah-tengah. Okay, what we call moderate one kat tengah-tengah. Right? Okay, next. Okay, this is the example of sources of short-term financing. We have trade credit. Okay, means that this is the actually what we call a current liability. Example of current liability. We have trade credit, we have accruals, we have deferred income, commercial paper. Maybe commercial paper is quite new to you. Okay, public deposit, intercorporate deposit, commercial bank, factoring, and installment credit. Okay, we not cover all the sources of short-term financing. Just want to all of you know what is the sources of short-term financing. We only cover 4 or 5 from these sources of short-term financing. Okay, so let's look what we will cover for the sources of short-term financing. I mean that we cover in our syllabus. Okay, so let's look the definition of managing current liabilities actually. Okay, current liabilities CL are short-term sources of fund, which includes accruals, accounts payable, okay, which include accruals. This is an example of current liability. Accounts payable, notes payable, and short-term loan. Okay, short-term loan is divided into two, secure and unsecured. Okay, selamat dengan yang tak selamat. Okay, terjamin dan tak yang tak terjamin. Okay, and liability originally scheduled for repayment within 1 year. This is very important characteristic. Repayment of the loan is within 1 year. So that's why we call current liabilities. If more than 1 year, it's not falls under current liabilities. It's fall under non-current liabilities. Okay, the third one, secured sources involve the pledge of specific assets as collateral. Okay, when comes in the word secured, okay, we actually have asset as collateral. What is collateral? Jaminan, cagaran. Dia selamat kan? Dia dijamin kan? Dia terjamin because of ada cagaran. Aset yang dicagarkan. Okay, in the event of the borrower defaults in payment. In the event of borrower default in payment. Sekiranya default in payment ni maksudnya tak bayar, what happen? Aset tu akan diambil lah. That's itu yang kita maksudkan. Selamat lah, maksudnya terjamin. Okay, secure. Okay, of a principal or interest. The primary supplier are commercial bank and factors. The main asset use are account receivable and inventory. Okay, apa yang akan dicagarkan adalah, apa yang akan jadi collateral adalah account receivable and inventory. Okay, that's the collateral for the loan. Alright, continue. Okay, how about the unsecured sources for loan? Okay, why we call unsecured? Because without the borrower pledge of specific asset as collateral, tak ada cagaran apa-apa. Just based on trust. Okay, just based on trust. They are only dependent on the ability the borrower to prepay the funds when due. Kalau dia tak bayar, tak kira selamat lah, tak bayar. Okay, example of unsecured short-term credit are accrued wages. trade credit, unsecured bank loan. Okay, maksudnya tak ada cagaran lah. And commercial paper. Okay, this is the example under unsecured sources of financing. Right? Okay, spontaneous sources of funds are accruals and accounts payable. This is the example of spontaneous sources that I already explained before. Okay, at the beginning of the lesson. Okay, what is the example of spontaneous sources? We have accruals and accounts payable. Why we call the spontaneous? Because it's spontaneous increase when the transaction increase. What type of transaction? For example, the purchases of transaction increase, so our accounts payable also increase. Okay, same goes to accruals. Accruals may be increased also because of increases of transaction, any transaction. Maybe expenses, okay, maybe revenue. Alright, sorry. Okay, so the accruals consist mostly of wages, tax, okay, owed for the which payment are not yet due. The debt is free, is no interest is paid to the fund raised. So no interest to be paid for this accrual. Okay, so kita tak perlu bayar interest pun untuk accrual. Tak sama macam loan, short term loan, commercial paper, semua tu ada interest. But for accruals, tak ada apa-apa interest. Okay. Okay, let's move to the first one, accounts payable. This is the sources of short-term financing, or what we call the current liabilities. Yang pertama, the first current liability that we have to manage is accounts payable or trade credit. Okay, what is trade credit? What is accounts payable? Trade credit is the spontaneous sources of the financing that arise from ordinary credit purchases. I already explained it before. It is the most flexible sources of short-term financing for a firm. Most flexible sources. The objective of the firm is to pay on the last day on the supplier credit term to allow the maximum use of interest-free loan from the supplier. What means by interest-free loan? We no need to pay any interest amount to our supplier, to our accounts payable. Okay, just we have to pay within the credit term given. For example, 2 month, we just pay the 2 month at the end of month, at the end of second month. Why? Because we want to the maximum kan, kita nak maximum kan kelebihan yang apa ni ataupun kemudahan yang accounts payable bagi 2 bulan credit term. So bila kita akan bayar pada hujung bulan ke-2 tu. Without any interest. Kita pinjam 20,000, kita bayar pun 20,000. Pinjam 1,000, bukan pinjam lah, maksudnya kita beli barang niaga 1,000, sepatutnya kita dah bayar masa beli. But accounts payable ni, kita delay the payment because of accounts payable allow, okay, to give a credit term. That's the benefits of accounts payable. Okay. So this is the components of trade credit actually. The free trade credit, okay, credit received through the discount period. Okay, the second one is costly trade credit. Credit is access the free trade credit and cost based on the discount rate. This is the cost that purchasers must bear in the exchange of the benefit is paying over than the time given. This is finance charge incurred for deferring the payment past and pre-specified discount period. Free trade credit, because we pay within the time given, within the discount period. But costly trade credit, we didn't pay within the time discount period. That's why we have to bear the expenses or the additional charges. Okay, that's why we call it costly trade credit. Okay. Another current liabilities is bank credit. So bank credit, okay, we have short term, only short term one. Okay, short term bank credit. Bank loans appear on the balance sheet. Okay, banks loan appear on the balance sheet as notes payable. Okay, and there are non-spontaneous debt. Okay, number 2, unsecured short term credit, known as short term self-liquidating loan. Umi tengah record. Belum nanti. Umi tengah record. Okay. Unsecured short-term credit known as known as short-term self-liquidating loan. Okay, this is unsecured for short-term credit known as short-term self-liquidating loans. Okay, this barang credit has maturity as usually one year or less. The maximum is 1 year. It can be, it cannot be more than 1 year, because when more than 1 year, it falls under non-current liability. Okay, or less, maybe 2 months, 3 months, 6 months. Okay, with rates of interest depending on the credit worthiness of the borrower and the level of interest rate in the company according as in the rate of the company as a whole. Okay, message from bank loans are line of credit transaction loan. So this is actually the characteristic of bank credit for short-term bank credit. Okay, the keyword here is actually the short-term financing. The repayment period might be less than 1 year or maximum 1 year. Okay, that's the bank short-term bank loan. The second one is commercial paper. What is actually commercial paper? Commercial paper is actually unsecured promissory notes. Okay, nota janji yang tak unsecured tu maksudnya tak terjamin lah. Okay, notes issued by the firms with the high credit standing that are financially sound. Apa maksud high credit standing? Maksudnya dia hanya akan bagi pada person ataupun pada company yang mempunyai high credit standing. High credit standing maksudnya dia tak ada masalah untuk repayment. Okay, tak ada masalah untuk pembayaran semula. That's why dia akan dapat facilities of commercial paper. Not all company will get commercial paper facilities. Okay, maturity varies from 30 days, okay, until 270 days. 270 days lebih kurang 9 months. Okay, 1 month to 9 months. Interest rate usually, okay, what the difference between this commercial paper and bank loan, short-term bank loan? Okay, interest bank loan, semua company can apply. Commercial paper cannot all to apply, tak boleh. Okay, dia hanya based on high credit standing. Okay, maksudnya dia hanya untuk perniagaan-perniagaan yang mempunyai high credit score and also dia punya financial condition is very good, right? Interest charges are usually lower. That's why interest rate is usually lower, because of the risk is low. Okay, maybe issued directly to investor or placed by dealer. Okay, interest usually discounted and fee charge is placed by a dealer. Right, this is commercial paper. That term is new for you. Okay, so you have to understand what the differences between commercial paper and bank loan, short-term bank loan. As I explained before, commercial paper is not for all can apply, only for the certain companies, only for the certain people can apply. Normally with a high credit score or financially sound are very good, right? Okay, this is the advantages of commercial paper. Okay, in terms of interest rate are generally lower. Compensating balance requirement, no minimum balance requirement. Okay, what is the compensating balance? Compensating balance ni actually one of the motive of withholding cash. We need compensating balance. Compensating ni maksudnya adalah kita ada satu nilai tunai yang cukup untuk kita buat pembayaran loan ataupun commercial paper ni. So untuk loan dia perlu ada minimum compensating balance dalam account. But for commercial paper no need. Tu maksudnya dia tak perlukan compensating balance requirement. But for bank loan they need compensating balance. Okay. Amount of credit offer firms with very large credit needs. Okay, sangat-sangat besar credit needs. Okay, single sources for all its short-term financing. So dia boleh bagi amount yang sangat besar sebab dia percaya pada company tersebut yang dia punya credit score yang tinggi. Right. Prestige signifies high credit status since only the most credit-worthy borrower can issue commercial paper. Okay, tak semua borrower can issue the commercial paper. Okay, only the borrower yang ada credit worthy. Maksudnya credit worthy ni maksudnya dia ada credit scoring yang sangat bagus lah. Okay. So what the disadvantage of commercial paper? It's impersonal and hence It does not allow any flexibility with regard to repayment to borrower. In case of default, so kena tanggung sendirilah kalau borrower tu tak bayar. Okay, next. This is the last part. Okay, kalau commercial paper and bank loan tadi is unsecured, okay, short-term financing. But now we have secured short-term financing. Ataupun kita ada short-term financing yang lebih terjamin. Why lebih terjamin? Because we have a collateral. We have a collateral. Kita ada cagaran. Apa yang kita perlu cagarkan? Okay, we have account receivable. Kita cagarkan kita punya account receivable. Kita cagarkan kita punya inventory. So when becomes a default condition, so account receivable tu akan diambil lah. Inventory pun akan diambil. So dia lebih terjamin. Dia lebih selamat lah. Okay, so this is an example of account receivable loan, pledging account receivable. We also have factoring account receivable. Okay, inventory loan, we have floating lien agreement, trust receipt inventory loan, field warehouse financing agreement, and terminal warehouse agreement. Okay, what I want to do, I want all of you to do is, please read this part in the textbook, and please do a summary in the mind mapping. You will you will do the summary, write the summary, maybe mind mapping in the one piece of paper. Okay, for the title is secured sources of loan or secured short-term financing. Okay, explain the 6 item here. Okay, so I will check this task this week, maybe tomorrow. Okay, at our tutorial session. All right, so that's all, class. That's all for today. So hope you enjoy with this video. Any question you want to ask? Okay, you will ask in the group WhatsApp. Okay, financial management group WhatsApp. Thank you. Assalamualaikum.